At a time when economies around the world are grappling with high oil prices, OPEC Plus announced fresh cuts to oil production.
Wording that the Saudis will do whatever it takes really is what's pushing oil higher at this moment.
Members of OPEC Plus announced that surprise cut just over the weekend.
The battle between OPEC and the United States in the energy market is reigniting, with Saudi Arabia's recent announcement of an oil production cut. While the news initially pushed prices up slightly, the influence of U.S. producers provides a significant counterweight to Saudi Arabia's dominance. Despite talks of the demise of the American fossil fuel industry, it seems premature. President Biden has emphasized green energy and implemented policies to support that vision. However, he has also recognized the importance of carbon-based fuels and softened his stance towards the industry he once criticized. In fact, U.S. oil and natural gas production is steadily increasing, approaching record levels, and exports are reaching new highs. The production cuts, announced by Saudi Arabia, set to take effect in July, could potentially reduce global oil supply by 1 million barrels per day, or about 1% of the total supply. While this may not seem like a significant amount, the oil market is relatively tight, and even small changes on the margins can impact prices. Consequently, oil prices saw a modest increase of about $1 per barrel, bringing Brent crude, the global benchmark, to around $77 per barrel. However, this price jump is much smaller compared to April, when a surprise production cut of 500,000 barrels by Saudi Arabia and other OPEC Plus members caused Brent crude to surge by $5 per barrel in a single day. The global oil market is constantly evolving, especially with geopolitical tensions such as Russia's involvement in Ukraine and sanctions affecting Russian energy products. Throughout the past year, rising U.S. production has played a crucial role in stabilizing global markets. Prior to the COVID-19 pandemic, U.S. crude production peaked at 13 million barrels per day by the end of 2019. However, it plummeted to less than 10 million barrels per day in 2021 as demand collapsed, resulting in substantial losses for the industry. When President Biden assumed office, he advocated for an aggressive transition to renewable energy and the eventual phasing out of fossil fuels. However, as oil prices soared and gasoline prices reached $5 per gallon in the middle of 2022, Biden shifted his approach. He began urging American energy companies to increase oil and gas production in order to lower prices. Despite facing challenges such as pandemic-induced losses, previous years of overproduction, labor shortages, and rising costs, U.S. production has been steadily rising. In March, the most recent data point published by the U.S. Energy Information Administration, oil production reached 12.7 million barrels per day, just 2.3% below the record production of 2019. The EIA forecasts that U.S. production will remain at these levels through 2024. Moreover, the United States is now exporting more petroleum products than ever before. March saw the highest levels of U.S. crude and crude product exports, including gasoline and jet fuel. These record-breaking exports are helping stabilize world supplies and keeping prices in check, according to a research note by Citi. Additionally, U.S. natural gas production is at an all-time high, along with record high LNG exports. Increased U.S. LNG exports to Europe during the winter played a crucial role in mitigating an energy crisis when Russian gas supplies to Europe were disrupted. Since Russia's invasion of Ukraine in February 2022, the dynamics of global energy flows have significantly shifted. Western sanctions on Russian oil and gas have forced Russia to seek alternative customers, allowing new sources to fill the void. Nevertheless, the United States remains the world's top oil and gas producer and exerts a strong influence in global energy markets. Before the pandemic, a production war erupted between OPEC Plus and U.S. energy firms utilizing fracking technology to access previously untapped reserves. As U.S. production skyrocketed, the OPEC nations, led by Saudi Arabia, increased their output to maintain or expand market share. Ultimately, consumers benefited from this competition as energy prices plummeted from 2014 to 2020, culminating in the unprecedented moment when oil prices briefly turned negative in April 2020. In the aftermath, U.S. energy companies pledged to exercise capital discipline, prioritizing shareholder returns through dividends and stock buybacks rather than investing in new capacity. With pandemic-induced losses and the need to regain profitability, U.S. firms seemed to relinquish their hold on the market to OPEC Plus nations, which boasted nationalized oil companies controlled by their governments and the ability to continue investing without alienating stakeholders. The landscape has shifted once again. In 2022 and continuing into 2023, U.S. oil and gas companies have increased their investments, rebounding from a period of decline between 2019 and 2021. This resurgence is not solely due to President Biden's influence. It is primarily driven by the prospect of generating substantial profits with oil prices in the range of $70 per barrel or higher. Industry experts anticipate that these price levels will persist long enough to justify the investment. Unlike Saudi Arabia and most OPEC Plus nations, the United States cannot exert direct government control over its energy industry as it operates within the private sector. Nevertheless, the U.S. energy industry acts as a formidable counterforce against the Saudi-led efforts to restrict supplies and maintain high prices. Consumers can only hope that both sides prepare for another protracted battle, which may potentially bring stability and lower prices in the long run. In conclusion, the OPEC-US battle in the energy market has been reignited by Saudi Arabia's oil production cut announcement. While the United States has been promoting green energy, it has also recognized the significance of carbon-based fuels. U.S. oil and natural gas production are gradually approaching record levels, and exports have reached new highs. Although the Saudi cuts may seem relatively small, even slight adjustments in the global market can have an impact on prices due to its tight nature. The U.S. energy industry's resurgence plays a crucial role in stabilizing global markets and countering efforts to restrict supplies. As the world's top oil and gas producer, the United States continues to shape and influence the dynamics of global energy markets. As the battle between OPEC and the U.S. unfolds, consumers can only hope for a long and fierce competition that may ultimately lead to stability and more affordable energy prices. What are your thoughts on the OPEC-US battle and its impact on energy prices? Please share your comments and insights below. Thanks for watching our video. We hope you found it helpful and informative. If you found this video helpful, please give it a thumbs up and consider subscribing to our channel for more content like this. And don't forget to hit the notification bell to be notified when we upload new videos. Thanks again for watching, and we'll see you in the next one.